Well, Pete McGuire here in the studio. It's another start to the week. It's going to be another big week. They're all big weeks, irrespective of the data that comes out of the central banks around the world. Welcome.
Good morning, Will. We haven't got a lot of slew of data in the sense what we're really keeping a focus on as European PMIs is that another continuation as far as this double dip. I'm looking at inflation. We're conscious as far as the themes there, and of course where the markets have traded over the last week has been very volatile. We were sold off as far as equities and they bounced back strongly.
They came in very strong.
Yeah, and Saturday morning was really quite a surprise, and S&P up the best part of 1.5%. Dow just shot over the 1% mark, and the Nasdaq really knocked the ball out of the park, very, very strong to the upside. So I get a sense that US dollar's coming under further pressure. Currencies have been volatile. Been a good week to trade.
Interesting. As we set the scene, we're sort of going into a period of time where there's a lot of road showing post results. So a lot of large firms globally briefing key stakeholders, a lot of deals being made, a lot of M&A being announced.
Yeah, it doesn't surprise me. You know, on the coattails as far as COVID and companies through organic growth, or they look at competitors and buy the third or the fourth or the sixth in their silo, and then take those out of play. Look at the customer base, look at what the offering is, see if when you merge two corporations, not only are you looking at technologies or innovations or whatever.
Culture's one of the key,
I was just about to get to that.
I wanted to get in there first.
That's why they all fail. Yeah, we studied that greatly at Wharton, and the greatest challenge is for any IPO, well, any M&A, is to really embed that across the whole organisation. And what you can sense, and it's more or less very much the whole frame, and I've been involved in a couple over the years, one springs to mind, a small dynamic entrepreneurial focused group, Australian based, bought out by a multinational global headquartered in Nevada. I was in the gaming industry 20 odd years ago, and that interesting to see that melding and how it tried to put it all together, and it's not normally a very good fit.
Interesting. So culture, measurement of culture, looking for identification drivers, and I suppose that is something that everybody thinks about going into a deal.
Organisational design.
Organisational design, the co-design of an output. But then measurement. How do you measure it?
Well, that's the issue. Do you see increased share? Well, first off, you've got to look at shareholder value. If you paid 100 million or $1 billion for something, what is it? Has it grown the business? And over the next couple of years, was it a profitable outcome? Were those technologies adopted through the big organisation, or or shelved? Who was and this is the interesting part from my analogy of it, or not analogy, but my understanding as far as those stakeholders. Normally someone on the board identifies an opportunity, so they could be, and they see, oh, well, we need to take that one, and they've got a large client base, we're not in that space, and it's going to be a good fit. And what happens if they get moved from the board? So who's going to steer it through? Who's going to keep it all bubbling along and wrap it up nicely and, keep that whole vision moving forward? And that's really the great challenge that any M&A face.
It's interesting, isn't it? Vision's one thing, execution's really the other, isn't it?
Well, and you've got to it's got to come from the board, because CEOs are only in for short-term tenures, and if it's not a top-down approach from the board, and you've got a number of key directors that are really going to get this on board, maybe a vice chair, someone like that, or a large shareholder that sees the
strategic value.
Strategic value.
But let's bring this back to the focus. We're talking about a world which is effectively in a state of flux. We've seen it's a dynamically changing market. Yeah. The market's presenting new opportunities every day. I mean, we saw an IPO last year of an Australian company which was touted as changing the world. Today we read about the infighting between the board, which has effectively destroyed its shareholder value. I mean, this is a 6-month-old engagement that's actually gone and imploded on itself.
And the poor shareholder sitting there, and I don't know the company you're referring to, and say it's at $5 a share, and now it's sitting at $3.60, and you're just scratching your head, going, I thought it was going to be a $7 stock. And it didn't produce. And
the rush to the board, the exit, the creation of the wealth. And then the question is, why, guys? Why the timing now, given that all parties would have known that this was happening internally?
Well, that's the challenge that any stockholder faces. Do you really know the inner workings of a firm? You can look at balance sheets, you can look at prospectuses, you can look at company announcements. You're in corporate, you talk to the biggest players in Australia and probably Asia Pacific, but are you really getting the meat and potatoes? Is it a snow job? So anyway, we have digressed a little bit. We should get back to markets. But
we are talking markets, we are talking opportunities,
Sure.
we're talking buying signals.
That's right.
This is really where this gets focused.
Absolutely.
Right? Some of these things are known, some of them are not. But to your point, we're off topic. We should dive back in.
We're off topic in the sense where we're talking about the fundamental analysis of firms and what we need to be considering if you're looking at trading stock indexes or stocks. We even get into and many traders aren't aware of those, so it's valuable to our customer base and to your audience globally. But a lot of traders aren't across it. They haven't been to a business school. They don't understand all of those inner workings. They may be a surveyor, they may be an architect, a doctor, very much sheltered from the reality as far as corporate world. And they look at technical analysis or a seasonality, or they see a chart, but then they get that education standpoint that, wow, I didn't even think like that. It's a marriage, and that's what marriages are. I'll share this one with you. My uncle, lovely fellow, he was a principal of a local public school at Clovelly, and great guy, fantastic man. And I was a young fellow, and he said at a Christmas gathering with all the cousins and and I was only probably 10 at the time, marriages, someone has to work very, very hard. If the other party, it's a 50-50 split. But if one person's not working 50%, they're working 10%. If it's still together, then someone's working 90% to keep it alive and to keep that whole thing engaged. And that's what a company's about. And sometimes the focus gets washed away. And if you're not working 90%, then you get that outcome that you've just identified. Everything is very simple. You've only got to follow the money. If you don't understand anything in life, take that one approach. Follow the money.
Good signal, good lesson, good thought. US inflation's taking off, but perhaps it's too soon for the Fed to react.
I'm going to share something with you, and I keep this paper at the ready. And
I like the fact that you're introducing the Financial Times back into this conversation.
Absolutely. Front page of the Financial Times. I buy it every Saturday at Clovelly.
Billionaire boom.
Yeah, and
the great inflation scare of 2021. I see an eagle there, Pete. That suggests to me that someone's about to take a view on a US-led
well, when we see that,
story.
Will, when we see that, it's the eagle has flown, and it's soaring at the moment. And I'm very much concerned. We've been talking here for the last 3 months about the inflation curve and what's happening, and everyone on across the globe has been, I don't think, very, very focused on it. Well, it's coming home to roost,
and in a big way. I mean,
and
look at
a
this.
big way.
In the US here, we're talking manufacturers' prices paid. That's the dark blue line on the screen, followed really quite closely by the CPI.
Well, what worries me there is that you've stimulated a global economy with trillions. What's the number? Is it 5 trillion they've spent? Who knows? Let's say it's 5 trillion. Let's say it's 8 trillion. I don't know what's been spent globally. But you do get an outcome. The outcome is higher energy prices. There it is. Front page of the Financial Times on the weekend. You've got higher energy price. You've got higher inputs. We had iron ore peak at 225 last week in Singapore, a metric tonne. I've just shaken my head in disbelief. Copper prices booming. Gold's back up to nearly 1850. US dollar's been hit to the downside. Equity markets, we had the Nasdaq up nearly 2.5%.
Well, let's just run down that list. I mean, stock markets, S&P 500, up nearly 1.2%. Nasdaq Composite 1.8. Dow Jones Index 0.7. Euro First 300 1.2. I mean, look, as we go down the list, and you can go and research this yourselves, but there's only one negative number here, and that's the MSCI EM down the bottom.
Yeah.
And
so it's been very, very strongly bid, and this is the inflation curve that I think worries Main Street from a spending power. So everyone's going to put their hand out for higher wages, quite simply because it costs more to live. Costs more as far as foods, costs more as far as energy costs. We're coming into winter in Sydney, and those energy costs, kids or mums of family say, I've got to dry the kids' clothes. The sun's not out, I'll put them in the dryer. It costs a bomb to actually do that. Washing sheets, all that. We've got some wet weather, we've got to wash everything, so it all goes into energy. You shake your head there and go, you can see it all. You've got the heaters on at home, the kids sitting around the heaters. Everything costs more money. And I think that's the challenge that we all face, and that's going to be the interesting
let's flip it
point.
on its head. I mean, at what point do we say, okay, the world's too expensive, and we can actually take a step back and control this, and actually drive some local input and some local investment into actually, just changing the dynamic a little bit. It's not the only game in town.
No, it's not the only game in town, but that's the new age frontier as far as energy. So maybe it's the windmill saga, and maybe it's solar panels and all
energy,
of that.
But look, the reality is, let's face it, if there's a little bit of the tap turns on into a certain sector, plenty will come into it. We'll apply some advanced technologies into things. We'll solve some problems.
Yep. Academic research.
Well, there we have it. Diving into the UK economy, look, they say it's firing up. It's come from a low base, of course it is, but. Here we have the, if you like, the suggestion of the end of QE. So, are we seeing the political risk fading here? I mean, they've Brexited.
Yep.
They've exited.
Boris and the boys.
Yeah.
That PMI composite, yellow line, it's really, doing quite well. This, I think,
it's an uptick.
It's an uptick, but the shine,
days.
but the shine's going to be that third quarter. I think that will continue to be relatively strong for the UK. And I hope that summer is a good overall theme running across Eurozone and UK, starting in the next matter of weeks.
Well, let's hope so. I mean, it'd be nice to sort of see it step and pop out. If we look across the pond there, we're not really talking about it really on this chart, but I mean, if we talk about the relationship between the EU and the other countries, presumably they've kind of got back to business and they're trading relatively effectively. Yeah. I mean, we're not hearing anything.
No, I don't hear it here. 500 million people across Europe and engaged, very much, tourist driven over hopefully the Junes, Julys and August. You've got a lot of people there to go to a lot of Greek islands, to sit at tavernas, to drink, to be happy, to dance, to...
Well, let's hope they do. Let's hope they do it with a little bit of social distancing.
Yeah.
Pete, we'll jump into the next chart. What do we got here? We've got the dollar yen. The call is that perhaps it's a hostage to rate differentials. I mean, what do you think about that?
Yeah, we're nearly at that 110 number, and I feel as though that it may hit it. I'm keeping an eye on it. I think the smart money's been earned on dollar yen over the last 4 to 5 weeks, or maybe 6 weeks. So it could consolidate a little bit at these sort of levels. There might be still another dollar to be made. I feel as though the US dollar could come under a little bit more pressure to the downside. And we're at that 90.3 handle as far as US dollar index. It bounced last week nearly to 91, may have even got over there. And then it's been spanked back down to 90.3, gold's up. So dollar yen, don't ever underestimate the power of the Japanese economy. And I'm looking at the vaccine numbers. Japan certainly hasn't been engaged from an age. I don't know whether they are the oldest
population.
Population, and the oldest. That mega city being Tokyo. I'm not sure if there is another nation out there, but there are a lot of old people in Japan. I go there frequently, and you walk down the streets of Tokyo, which is lovely to see. 85 and 90-year-old people certainly out, and a lot of them. And that economy, it's a monster of an economy.
So when they talk about the hostage here, potentially what they're really kind of saying is that the able-bodied active person is not necessarily the majority.
No, well that's right. I mean, they've got their population growth is very, 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 very poor, but they've got that aged economy, the baby boomer, that really is, through longevity and through technology, is living into their 80s, 90s, and probably a lot of centenarians as well.
All right, well that might be an interesting one to pick up and follow. But in this case, I mean, we're looking at if you take that December-January period, clearly Democrats took the Senate, government change in the United States. We saw a meteoric rise through sort of the end of March, early April. Right. We're coming off in April, and just starting to tick back up in May.
Yeah, absolutely. So I think it's just a wait and see from a currency trade. I think traders have got to be very conscious of it. There's certainly other cross rates as well with the yen pound, yen euro. So one that all currency traders keep a very close eye on.
All right, we'll move through the next one quickly. We've chucked on Japan there in the last couple of minutes. GDP growth looks like it's a negative.
Well, that's what I was getting to. I was waiting for that chart because I was conscious of it as far as how that second quarter is looking, third quarter and fourth quarter. I think you could see a little bit of a reversal as far as that GDP growth, but they're very worried as far, double dip, and does it continue? So does it fall in line with the current situation in Europe? We can't get inflation to really kick off in Japan, so let's just see what happens over the next 6 to 14 weeks.
All right, so quickly through then again, US-Japan.
And the reason for that is I'm not sure whether we still have a damn Olympic Games.
Well, that's the interesting position. The vibe at the moment. Last week, the Olympic Committee was sort of pretty pro. This week, small towns in Japan are saying, hey, we don't really want any visitors. So
that's why I'm saying that. So there's a lot of uncertainty.
Yeah.
A lot of large themes that.
And a significant investment. I mean, it's billions of dollars to put on a games.
Absolutely.
We've had a big run up.
There's an article in here about it. Actually, I was just reading them up. Olympic athletes left high and dry as Japanese towns cancel hosting plans. There you are. Yeah, you're well read, Will. Well read.
All right. So look,
US dollar yen. It's been a great trade. It's been enormous, really, since Feb, and I think it's going to consolidate a little bit. But the smart money was certainly earned from New Year's Eve onwards. Have a look at that. That was a big uptick.
Vaccine dosage. Japan.
Well, there's Japan. They're worse than Australia, and Australia
isn't good.
Well, I talk to people, and when you've got 10% of the population saying yes and 90% saying no, they're voting with their arms. That's the reality of the matter. So, what's right, what's wrong? But it's a big difference. In Japan is it really, probably by the looks of it, about 20% of what Australia is. So they haven't embraced it at all.
All right, Copper's futures. We touched on this pre-interview, but resources has been running pretty hard, hasn't it?
It's been great. That whole storyline all across the base metals has been one-way traffic. It gave up a couple of those gains. We had a nearly $5 a pound for copper, 10,500 a metric tonne, and it's come off where about $4.65 a pound of copper, and it was a big rise to the upside. All the smart money was being made out of trading copper, and where it runs from here, I think just a fraction, maybe some consolidation. And does it have a higher leg? Well, I'm not sure, but I know that that we've been talking about base metals now for a matter of months, and they didn't underwhelm; they overwhelmed.
It certainly did, and I mean, when you think about base metals,
and that's the inflation story,
right? So we've got inflation running, we've got metals going up. We just tapped. It might be one of the resource guys saying, "Boys, you need to get a little bit onto this."
Absolutely.
But we think about it. Gold, silver, platinum, palladium, aluminium,
nickel, lead,
nickel,
zinc, iron ore.
There's some real sort of I guess depth when we start talking base metals.
Metals, and the infrastructure story and what the rebuild as far as that demand picture all this decade. I still believe no one can tell me that the super cycle is not embedded. You go through many different phases. A general cycle is about 22 years, can run out to 30 plus, and this one started at the start of the century or close enough to it. And we've had now nearly 20 years, and I feel as though the way that the world's population's growing, we'll get another 20 years out of this. You can't put an extra 1.5 billion people on the planet, and as they come up the consumption curves, from buying a saucepan to using water to wanting meat to going from a bowl of rice to lobster, there's a lot of boxes need to be ticked in that consumption curve. So,
well, there's a supply chain into that. I mean, tell me, is there any aspect of a modern life that we can actually do without base or precious metals?
I don't think so. If you want a modern life, if you want a life, on the farm, you may be, self-sufficient. But if you want technology and you want iPhones and computers and, everything and electricity
and Netflix,
yeah, then you're going to need some technology.
Righto. Well, look, that was a pretty interesting run at this week's conversation. Pete, a couple more charts. We're looking at the pound, the Japan.
We made reference to that as far as that cross rate. Pound, yen, we said euro, yen. So just keep an eye on it. Again, almighty trade. There you're looking at that Japanese yen, the 225. Big push to the upside. It's consolidated and it's very much range bound at the moment. But it was a very, very solid leg up last year and to the early part of this year. So where's the Nikkei trade? Just there are other markets. Keep an eye on them. But at the moment, I think that maybe you've got to keep an eye on precious metals. Do we see oil trade through that 70? We haven't done that for nearly 2 years. So we're at $69.10, I think, this morning on Brent. We're not shy away. I've got the issues as far as Hamas, what's going on with front page. I make reference to it, but there you are. That's the storyline. What's it say? West Bank, what is it?
So West Bank clashes. They threatened the new front on Israel-Pakistan conflict.
Palestinian conflict. So that's the storyline there. You've got all of that drama, all of that unfolding from a geopolitical phase, and I'm sure that adds more horsepower to the price of crude.
Certainly will. Well, Pete, that's the week that was. That's the week that will be. I'm sure there'll be other opportunities to pick up and step up and identify trading signals that matter. But
thank you.
Thanks for the insight, and good luck trading this week.
Cheers, Will.